Hi, everybody. I thought we'd start a little earlier. We have GDP right out of the chute. So I'm sure someone in the team will be here.
I'm not
How you doing? How you doing? Hi, Ryan. Alexander, how are you? So look, here's where the S&P stopped on the 4-hour. And currency-wise, not a hell of a lot going on here. What are the expectations, Ryan, for GDP?
GDP is expected to come in at 2% versus 2.6% previously.
Okay. So any thoughts going into it dollar-wise?
Yeah, I think this is going to be another big bit of data for us. The first print of GDP is usually the biggest market moving one. If there's a big variation, obviously we're looking at playing this soft landing, hard landing, no landing game again. So anything above, way above 2%, let's say we're talking 3% or above, you're going to see yields rally, you're going to see the dollar rally, and we start talking about soft landings and Fed expectations on the hawkish side again, or at least maintaining hikes. Flip side, if we see a negative number, that's going to stoke the old recessionary fears, and obviously dollar and yields will suffer on that scenario. So if it's somewhere in the middle, round about 2%, give or take a couple of pips either side, probably maybe a tiny bit of a relief rally that things weren't bad, and then we go back to sleep probably.
Okay, so I'll put some 15-minute charts up. Is the number out?
Nope, not yet.
Okay.
Yeah.
Good morning, all. I think the GDP is only out in half an hour, right?
I thought it was at 8 a.m. EST.
Well, it says 8:30, right?
Yeah.
8:30?
Yeah.
Okay. Okay, that's why I started early. I saw someone say it was out at 5. Okay. So when's BOJ, guys?
Tomorrow, tomorrow for us, late evening for you, it should be around 11 p.m. Eastern time, or
Okay.
even take half an hour before, half an hour after. They never have like a fixed time. That's when we are expecting the first UEDA meeting to tell us what they want to do or what they don't want to do. Could be both.
Okay.
My base case is that they leave the monetary policy unchanged for now, but there is a chance that they start to talk about possible plans, and that's what really the market is going to scrutinize. What and how much and how fast they or how slowly they will adjust, and I reckon that's roughly the base case of expectations in the markets right now as well. It's a bit of speculation, of course, going on, and also I think they will, or they should at least normalize in some form, but it's going to be all about speed and amplitude.
Okay. So we had this nice reaction off 33 yesterday, but looks like it, could try it again.
Yeah, slowly coming back. Yen crosses are heavy again. Sort of what I expected. Market is betting on them starting to change something. So there's little reason for yen to be too weak or weaker before any announcement, right? So we'll have a reaction afterwards, of course, if they hint at some changes soon. That should really impact the yen later.
Ryan, this euro pound is getting rejected up here. These are just a few 4-hour chart.
Yeah,
what do you
made
think?
It's made a bit of a wish-wash of the 88.60 level. That had been the level going back quite a few weeks now. But there's a bit of a level up at 80, and it's not getting through that. So it's not fundamentally driving higher. I think this is possibly we're just seeing some flows, the differences again between cable and euro dollar. We're not even getting a close look at that 89 level, 89.20, which is fairly solid. You can see that double top we had across Feb and March.
Right.
But it's remaining fairly well bid. So, it keeps the momentum going in this short-term April trend.
Okay. Negative candle if it works this way. Okay. Here's my picture on the dollar. So could we go, get this panic under par? Do you think the euro topped yesterday with that action that we had? We did make a new high. Did not confirm up here. So I'm thinking one more. Here's this could be a 1 and a 2 and see what we do over, a 111. Again, 111 and a half. That should help risk after being punished for a few days.
Well, it's as we said the start of the week. You look at it across the last few weeks. It keeps making higher highs. It keeps making higher lows. That isn't changing.
How about cables? Cable's not making higher highs yet.
No, it's not. It's not. But if it
Yeah.
breaks that 123.5, it could be in for some fun and games.
Okay. All right. Stel, metals, quiet, still being patient it held at 24.5 silver.
Yep.
I think you had a level like at 24.30 or something like that you were looking at.
23.80 to 24 is the range. The level used to be 24.60-ish. That's where the breakout was, or 55, and we are holding. So at the moment, just sitting on my hands,
Okay.
and waiting. I did take yesterday. I wrote in the chat room a pair trade. I shorted both Euro Norway and Dollar Norway.
Yeah.
As a pair trade, and it's in the green, so it's going okay. I couldn't decide on which one to short, so I said I don't care about euro dollar. I'm doing both, only a third of the size I want to do, so it's small for now. And because this Norway has gone really crazy for too long. I mean, it's been, Norway has been really bearish. So all Euro Norway, Dollar Norway has been very bullish for the past weeks. Every day I've been saying I want to short it. I was holding up, and then Euro Norway got to the 61.8 fib. So I said that's probably not a bad reason to short it. But anyway, other than that, I'm just holding off, waiting for GDP today. And tomorrow we get. Do we get core PCE? Is it? I can't remember. We have something important tomorrow.
Yeah, that's tomorrow.
Yeah, so that's also another important number. We talked about this GDP number today on the Flow Show with the guys, and I said I think that if it comes in strong, and by strong I mean if we get like a 3 handle, then I think rates are going to move a lot more than stocks. Stocks have been really, what's the word for it? Slow moving. I mean, I don't know how to say it, but they've been really lethargic, like Greek words. But rates, we are still pricing 75 base points of cuts by February, and that's a lot. It's not, it's not to be dismissed. So I think if we get a properly strong GDP number, I think some of that's going to start to get reversed or taken out. So that's why I think rates are going to move more than equities. Equities is a weird animal at the moment. Yes, the S&P broke below that 4110, 4115 that we talked about, but it's still, if you zoom out and you go to a weekly, it's still going sideways. So, so we have small levels here and there, but equities are still sideways. And, credit to them, they've been trading in a very resilient manner. Anyway, that's my view for the number. Obviously, if it's weak, and I have to say, recently the trend has been for data, US economic data, to be disappointing. I think that the risk is that we get a disappointment today. And, if that happens, then yields move a little bit lower maybe, and 10-year is very close to support. 328 is huge. We might be testing that pretty soon.
So I got a question, and good morning, team, and good morning, everybody listening in, or good afternoon or evening. If we have disappointing data, Stelios, how do you expect risk to react? I mean, are we still in that situation where data is bad, stocks are going to enjoy it because the Fed is going to maybe be done with their tightening cycle, maybe even cut rates in the future? Or are we in a state at this point where if the data disappoints, stocks start thinking, or risk starts thinking, hey, this is here comes the recession, and it gets hit? What are your thoughts there?
Well, the new normal over the last 15 years means bad data equals good for risk. But I think as in recent, let's say, months, or post-COVID, I think this is slowly starting to go back, dare I say, to how it used to be. So bad data means the economy is not doing well, which means less spending, which means lower earnings, which means lower stock prices. So theoretically, risk should be going lower on bad data. Now, if it's terrible data, that's a different story, because then the fear of instant, or very close rate cuts will come. And that, I think, will give support to stocks. I know it sounds ridiculous, but I think that's what's going to happen. What I think would drive stocks lower was a slow grind of disappointing data and things looking worse and worse and worse. Anywhere near a crisis, I think that stocks perversely are not going to crater, which is weird. I know it's weird. But that's what I think, because this is what the market knows. The Fed's going to step in.
More than data, earnings have saved this market. They've been pretty good. I mean, look at Microsoft blew the cover off the ball, and Meta yesterday.
Yep.
And so if the economy's weakening, most of the bears' arguments is that there was going to be an earnings recession. And they're still coming in good.
Well, yes, exactly. And also, if earnings, if US economic data starts to look bad, then that means the dollar is going to soften more. And if the dollar falls through that 100.80 support in the Dixie, that's usually, the dollar and equities usually have a reverse relationship. So that should also bring some support. It's really difficult, in the past few years to really understand and gauge what the reaction is going to be to straightforward economic data. And it's really frustrating. Really is.
Yes. It seems like people are selling rallies in gold. We almost got back to 2000. We got back to, but it, just sideways since it got hit. I don't know. And the dollar hasn't been strong. So, I've even seen the metals not acting great with a weak dollar recently. I think that this correction has more to run.
With gold, we are so close to the all-time highs. We're only 4% from the all-time highs.
Yeah.
That this, I think, is a benchmark for anybody who wants to short it. They're shorting. And they know they're wrong if it goes above the all-time highs. So
triple top.
Triple top, yeah. Gold has been trading very, very well, I have to say. We get the odd dip, but look at the weekly chart or monthly chart. There you go. This looks good. And think about what rates have done over the past year and a half. That's what, to me, it makes me feel bullish in the medium term about gold, because we've gone from zero rates to 4.5% going to 5%, whatever it's going to be, and gold has done nothing, which is incredible.
How well it's held up, advanced in the face of higher rates.
Yes.
Yeah, and there's your monthly on silver. Actually a stronger candle, but it didn't get close to these highs. that went gold like 2100. This was 2100 gold. This was 2100 gold. And this was 2100 gold. So anyway, still, even though we've come a long way in the gold silver ratio, it's really, performed pretty well. The gold against the silver. Still, I mean, gold's making more progress, but XAU, I just think it's run far enough for now. Trying to base out here and correct. And I think it'd be a correction. That's it. Maybe back to 83 to 86 max. Anyway, I think the bears are going to be tested today in the S&Ps, another horizontal line that ended up meaning nothing. When it does this and then it does this, the line might be called a pivot, but I certainly wouldn't take signals from it because of that. It reminds me of copper, where look how many times we swung on either side of about $4. We're breaking out. No, we're breaking down. We broke out. No, we're breaking down. So that was a tough pattern. But you look at a weekly on copper, it doesn't look that great, right? I mean, we had the big break, and we're trying to bottom. Maybe we go all the way back down to here, 355. Anyway, so many conflicting signals that sometimes it's hard to just shut down thinking about it. You guys ever feel like that? Why? You notice, you have awareness, you step outside yourself and you notice, why am I thinking about where I would sell this or buy that, even when I'm not at work? You guys have that issue?
All the time.
Where you're thinking, huh?
All the time.
It's crazy. I can't quiet my chatterbox.
I was just talking about it on the Flow show earlier today, about the amount of
mental energy
things, influences, but not having one big catalyst to take stuff either way.
Yeah, and you think about it after hours. I'm watching an NBA final. I'm thinking about something that could happen tomorrow in the end. So anyway, I'm going to get some help. I'm going to lay on Kman's couch, and he's going to talk me through this.
Oh, we're going to sing together, Dale, and then everything will become so clear.
That is very good therapy.
I can see clearly now. You remember?
Oh yes. Yeah, I hope to be able to again. So let's see. I'll be taking heed on my positions today. So
and the one thing that I would add, if for Stelios as well, because we are in a bit similar positions in Norway, is that tomorrow we're having the Norwegian, the unemployment data, which usually don't impact much, but we will have the Norges Bank FX sales or purchases for next week, and that's usually a mover. So keep an eye on that one.
Yes, good point. Unemployment rate is going to be like 1.8%, 2%, 2.2. It's full employment. Let's forget about it.
And it's full employment. It's been full employment since I recall, actually.
Yeah. What a great country. Absolutely.
Because no one wants to work. So Nat Gas, a Widowmaker, trying to carve out, did bottom, see if it could hold this break. Way overdue. Look at this monthly. So, it's nice to break out a telescope once in a while, isn't it? Okay, not a lot of history, but look at where we are. Let's see, look at a weekly. What do you think of that? Boy, was that a bear market, huh? Can't say there haven't been opportunities in the last few years. Sometimes what happens is you get distracted. You see a big opportunity and you get distracted and you're elsewhere. And then you forget about it. Then you look back and you go, wow, that was what I was looking for. So this could end up being a decent opportunity here.
I did that on dollar CAD. I've been
Dollar
flagging
CAD.
at 133 for long enough, and then there pounced to the pip.
Yeah, and then you start focusing on something else. You turn your head, and it goes without you. So anyway, keep an eye on that gas. It's way overdue. It was a nice divergence down here, but another thing that, and I'm talking a lot about what I hear in my own head. Oh, I didn't buy it here. I missed the bottom. I'm late. No, you know what? It has more rationale now than it did here. Here it was a theory. Here you had price action. Now it's corrective. You're not late. You have confirmation and evidence to try more than you did down here to try along, and you have a reference place for a stop that you didn't have even if you bought the correct candle. You had to just use a money stop. But anyway, that's something else to think about is, if you don't catch the inflection point, don't talk yourself into that I missed it. No, it could just be beginning. And, I'm not sure what's going to happen with the stock market. I felt pretty confident till today, but, the sell in May and go away, I've been saying for a month, that's too pat. We have a few days left. It could still be right to sell in May and go away. So, say we rally back to 41 and a quarter or so. Could still be right to sell in May and go away. We'll see. Blake, you want to take over for a little while? I have to get ready for the interview. Peter's asking for the link and
you like bet. I'll take it right from here. How's it going, everybody? Good morning, good afternoon,
good morning,
good
boss.
Hello, Blake.
President of ForexAnalytix, CEO.
Hey, it's a team effort. I'm just one of the dudes around here. So, hey, listen, this
hail
is
to the chief, everybody.
Whatever. Nah. And speaking of, if you guys, look at that new feature alert. Nice. I'll have to read that here in a few minutes. Okay, so here, just you guys can see all the earnings coming out. It's big. We're coming like to the tail end of earnings season, and I had this discussion with Chris Weston from Pepperstone last night on the trade-off. Earnings just haven't been that bad. I know expectations come down, so it's easy to beat when expectations come down. But just bottom line, they're just not bad. I know we have MasterCard that just came out, and one of the comments that you can see here in the ForexAnalytix chat room. By the way, this is how Stelio sees himself in the mirror. Just so you guys know, just
come on, it's uncanny.
No,
right?
it's because when I look at myself, I also see Brad Pitt. So I'm just kidding. Stelio said that.
I love it. I'm a bit better built than he is, but other than that, we're the same.
Are you guys seeing this? Can you see this?
Yeah, we can see it. We can see it.
No. I'm talking about
thank you, Mike.
Else. Anyway,
which one's still?
We were just talking about the earnings that just came out for MasterCard, and the bottom line is consumers are still paying their bills. That's MasterCard's still seeing payments come through. So is Visa. That's a good thing. When you have this massive monetary policy just thrown at us post COVID, the lingering effect is, there's still some money left in the bank for the consumer, but how long is it going to last? We'll see. The tech. Well, I was really actually impressed with Meta yesterday. Meta's all earnings. 97% of its revenues are. 97% of its revenues are like ad revenues. So it's really good to see that they're doing well. Obviously they've laid off a lot of people, but the fact of the matter is they're doing all right. So and the stock's being rewarded for it. But the good news is the economy is not so bad, at least as of right now. But we're also going to be getting GDP this morning, which is going to be a mover. So lots to take in. We're going to see Amazon tonight, which, by the way, Amazon's going to be a pretty good gauge to see the health of the consumer. And, I look at Amazon stock and it's not as healthy as you would think, right? You would think Amazon should be trading near its highs or, at least higher than where it is right now. But these are, flag continuation patterns, triangles, pennants, consolidations in what I see as an overall bearish trend. So I know we're gonna, we got pre-market. We're gonna be up a little bit here in Amazon. See how it reacts around 110, and see how earnings are today. We've been overall pretty strong in earnings, so we'll see how that translates this afternoon. I want to talk to the team today about GDP. We obviously will have GDP come out. We'll take a look at what's happening. We have the BOJ tonight. Kman, you made some comments a little bit earlier about the BOJ. Seems like they're probably going to have some sort of policy review tonight.
No, I'm not saying that at all.
That's what I'm saying. I'm sorry. Let me rephrase. I think they're going to be announcing some sort of policy review tonight, which will probably take them through the next couple of weeks or months ahead of the June meeting. But they shouldn't be making a move tonight. That's what I think. So what are your thoughts here?
Yeah, exactly what I said. I mean, no move on monetary policy. A move would be a surprise. And we've aligned, and I've aligned some possibilities over the flow show as well of what they could do. But if, for instance, they would announce something on the ETF side, we have to know that they bought just over 1% of what over this quarter, what their yearly target or cap is. So they virtually don't buy any of it anymore. So if they would announce something there, that should be a non-event. But we know how the market is. If they would change anything at all, they probably will react. But sorry, really, it's going to be in the wording. If he wants to prepare the markets and their government as well, it is just going to be in the wording today. If they say for the time being we haven't discussed anything, then you're going to see a reaction lower in the yen, but it's probably going to be diverse in between certain pairs. And okay, dollar yen could shoot a bit, but looking at how the dollar is behaving globally, perhaps find the cap somewhere around 135 again. Other pairs could shoot higher, thinking about euro yen and sterling yen perhaps, but then stuff like Aussie yen, CAD yen, looking at oils as well, looking at how China is behaving, those may find offers a bit sooner. But it should move because there's so much expectations in the new governor. So whatever happens, holding hands still or announcing something, I would expect some moves. If it's all as expected, then I would say after the initial move, we likely will stall somewhere not too far from where we are right now. That's my view, at least.
All right, and I appreciate it. And the BOJ should be a mover tonight, regardless. And I'm really hoping for more of a non-event. You get some people selling some yen, maybe like get a little bit of a tick higher, like in the Aussie and something like this, and then I'll just be adding the positions. I actually if you guys are in the ForexAnalytix chat room, and I'm going to just show you this so everybody has an idea. You can see my open trades right here. I keep them. I keep a log. You can just kind of go through every time I add or take off. Since we do FIFO here in the United States, my averages will change as I add or take away. Like I just closed a quarter of my dollar yen, here, and you see it's all mapped out. It's not just me though. It's everybody not everybody, but a lot of people in the community. They put in what they're buying and selling in the trades room as well. So this way you have running account of what I'm doing. And for me, I just I covered a little dollar yen, and I plan on selling rallies tonight. And I think that that's going to be the case. I mean, if they did make an adjustment on policy, it would definitely be a surprise. And you know what, Ryan, I don't want to give away your analysis here, but Ryan just wrote up a really good blog right here. So let's go ahead and make sure that I'm going to copy this and I'll put it in the chat box. It is for everybody to read. It's free. Take your time and read that. Ryan puts together some really good thoughts on the BOJ. So make sure you guys take advantage of that. And
nice, Ryan.
and check it out.
Thank
Yeah.
you.
So
I stole some of Kman's thoughts as well.
You're a writer too. How about that?
he is a bit of a writer.
Yeah.
Hey, I don't know if Steve is here this morning. Steve, I know we're running a little bit out of time. Any thoughts on GDP if you are here?
I am here, mate.
Oh, good morning. Any thoughts on GDP before it comes out?
Good morning. I know it's not going to sound very scientific. Nevertheless, this is my opinion. So, I've said it before and I'm going to say it again. First of all, I don't like to make predictions. I would agree with Stelios in the sense that I would assume that GDP would probably start worsening. There is, though, the problem that I don't trust at all, especially lately, the CPI data, and that directly affects GDP. Because, you produce a weaker CPI than you actually have, then you boost GDP at the same time because of the GDP deflator effect, right? So if it wasn't for that, I would have a lot more certainty in CPI likely missing expectations. But in this case, I leave everything open.
Okay. Well, appreciate that, Steve. We got about 20 seconds. And obviously I didn't really pay good attention to the time. I should have given you a little bit more time to talk. Sorry about that. I think we should also look at the jobless claims. They are starting to tick higher. They start getting towards that 300,000 number. We're going to start seeing some volatility there. Here we go. Data's out. And you can see all the jobless claims coming out. All right.
1.1 on GDP. Bit of a miss.
All right, a little bit of a miss. We're seeing the dollar come under pressure.
This is not good.
But stocks are not liking it. At least, well, they're kind of. It's weird. We're in that. There's not a switch that gets flicked that says, hey, risk on, risk off. Dollar strengthens here, reverses here. Look at the dollar rally right now. The
GDP price index was stronger than expected.
Yes,
PC price is a lot stronger.
Yeah,
wow.
Sales
Well,
stronger,
so higher rates.
consumer spending stronger, 3.7%. So I would say it's not as bad as that headline suggests.
All right. Well, we're getting some activity right now. I think you got to be watching. Well, there's a setup that we posted in the chat room that I think you guys need to be looking at. The dollar's getting a little firm. Stocks are coming under a little bit of pressure, and just keep that in mind. All right. Well, hey guys, make sure you check out the Trader Funding Program if you want to learn how to get involved in the community, so you don't have to risk your own money when you trade. You can risk ours. You have to take an assessment. But while you're taking an assessment and while you're in the Trader Funding Program, at least for a period of time, you are in the ForexAnalytix community. This way you get to actually see, what we're doing. You can talk to us. You're not alone. And that's the thing about trading, is you want to be in a community. So it doesn't matter if you're trading a $25,000 account or you're trading $1 million of our money. You can learn about it at the traderfundingprogram.com. Watch this little 2-minute video, tell you all about it, and check out ForexAnalytix while you're at it. All right, Dale, I'm going to pass you over because I know you have a special guest coming in today talking about Elliott waves. And
Peter's.
We always love having Peter here. So,
okay. Thank you, Blake.
Thanks, guys.
Hey, team. Thank you, guys. Stel,
thank you, Coach, for being here day in, day out.
Kman, Steve,
thanks,
all
Coach.
you guys.
Amen.
Thank you for surrounding me with appreciation. I'm
Love
tired
you, Coach.
today. Hey, thank you. Peter Goodburn, my trading warrior brother. Welcome back to F.A.C.E. How are you, Peter?
Thanks, Dale. Thank you very much for inviting me, guys. Blake and Steve. Hi, good morning to everybody.
Hey, mate. Hello.
Good morning.
How you doing, Dale?
Kumbaya.
Yeah.
Anyway, Peter, really looking forward to your analysis at this, kind of time zone that we're in with a lot of inflection points. Feel like they're close. You want to share your screen and tell us what's top of mind for you right now?
Let's have a look. I think there's plenty of situations going on here, really. I mean, in
Peter
a way.
and I just got back from Woodstock.
I beg your pardon?
We just got back from Woodstock.
From Woodstock.
You know, because of our
Really?
long hair. You know, Woodstock, the rock festival.
Ah, yeah, I know what Woodstock is. You mean
Anyway.
you think I've just got back from Woodstock? Okay. Yeah, well, you know, this is my anti sort of pandemic sort of look. You know,
Hey, you look like a wizard.
I'm a changed man.
So all right, was this week's sell-off, because we're having a recovery today in S&P? Was this week's sell-off enough to, what you say, give us a reversal signature to the downside?
Well, we've had a reversal signature to the downside on equities actually for a little while now, because we've just seen a lot of disparity in the different sort of makeup of the markets, the different sectors, and there's been a lot of rotation. I mean, if we go back, if we have a look at, say, for example, the Dow Jones. Can you see my screen? Okay, by the way.
Yes, we've got it.
Good, great. If you look at the Dow. In its corrective decline that began from the Jan 22 high,
right?
We can see a replication as a zigzag downswing into the June low last year, and then the corrective process that followed, which is basically wave X. It's the sort of intervening pattern in a double zigzag decline, and wave X in this case was an expanding flat. So we go up into August, down into October. We get a 5-wave look up into the December high at this 34,000 number, 34.7, and actually, so that pattern actually finished in December. So that was giving us a sell signal back then, and then you sort of flip and look at the S&P by comparison,
and it was making higher highs.
We're only just sort of like, well, we finished maybe in February. And of course there was basically a 2-month lag, you know, between December and February. So here's the December high that the top of is confirmed in the Dow, and here we are in February. We haven't broken that yet. probably now, after seeing yesterday's action, probably unlikely to break that high.
Okay, is that why you kind of have it faded out? The potential count to 43.27 becomes,
well, I wasn't certain,
less likely.
Yeah, I think before yesterday's session, I wasn't certain if we could manage a bit more oomph to the upside, but it's looking increasingly less likely that we'll manage to do that now. If you take a look at the very short-term picture, you can see that yesterday's decline. We started to expand the price relative to the first downswing here. So this is the Tuesday, the week before. So that's the mid-April high at 41.9825. And you can see that the extra additional sort of sequence down yesterday rather expanded the price action relative to the initial first wave. So that makes it look like a third. Now, sometimes in Elliott wave, and one of the most difficult things about applying Elliott wave are these corrections, because sometimes in a zigzag environment where you get 3 price swings declining, say, for example, like this, sometimes you get a disproportionate C wave. It's rather elongated relative to the first wave or the A wave. And that's really difficult because they can basically masquerade. They look like a third wave, but they're not. So you've got to be a bit careful. So we haven't quite got to a point where the S&P is really set in stone that it's going to drop from that secondary high at 41.98.
We need closes under 4K to really seal the deal.
Well, I think the main importance here is the pattern itself. I mean, you can see it struggled in this rally overnight.
Yeah.
If that were to sort of complete a 4th wave and then come down in a 5th, so the pattern is going to change, and we get
then have then have an ABC type recovery.
Yeah, but then we got 5 waves down, you see, and there's no way then it would go back above 41.98. Yeah, we get a rally to sell into again, but you know, you can be pretty confident about the direction. So that's the only sort of situation. But I just say this because you know, I suppose if you look at probability issues, that could be a zigzag with an elongated C wave, and we try and trip up to a slightly higher high, which would look like this. Then you get up to 42.12, but I think probably not, because if you take a look at the Nasdaq, for example, by comparison. Yeah, we've got about a 1.5–2% upswing in this rally. The main reason is that when the S&P dropped down from last week's high, which is basically here at 13,298, it's dropped down in only 3 ways, not 5. And when the S&P continued down a little bit lower yesterday, this just made a secondary low. You can see the sort of, it was a bit like a bullish divergence.
Yeah.
You know, because this one didn't make a slightly lower low, and this one is capable. Well, it's isolated.
That's where all the earnings are. That's where all the earnings are coming in pretty positive. Microsoft knocked the cover off the ball, and Meta, and who knows, Apple probably will next week because I'm in puts. So anyway, the tech,
that was it.
The big sell-off, the real weakness were in things like cat and deer. They've been declining for a while, and the semiconductors I don't think will make a new high. You track the semis here, Peter?
Yeah, I think we've got semiconductors here in the sectors. Yeah, I think that's
until I see your chart, then I think they might be able to. No, well, they could challenge a recent high.
Yeah, well,
that's a big break into July.
Yeah, this is really starting to look very bearish indeed. A lot of the sectors, again, some of them actually, some of the sectors topped out in January. You know, things like I think, if I'm not mistaken, things like healthcare, maybe consumer staples, stuff like that. Others topped out in February. And this one,
you know, Apple is the only FANG or MAGA stock that really hasn't corrected through 2022. And you know, Peter, people think it's as safe as a CD or a bond, and it's the gold standard of stocks and an icon of America. Don't you think it's the most crowded trade on the books out there? Long Apple. I mean, you know, Steve is normally bearish. Okay, Steve, are you here? Okay, and I'm talking about Apple.
I am here, mate.
And I could be wrong, but here's a guy that's really bearish, and you know what he says about Apple? It's a good company. So even stock bears can't get bearish Apple. That's my point. I was thinking about that yesterday, Steve.
Well,
go ahead. What do you think
some
about
of these mega
that?
caps? Well, actually, this is an old chart that I drew, obviously, earlier this year, about 6 weeks ago. And I had an upside. I knew it was going to have another rally. I had a target at 169. And if I remove my chart, because I can't see it properly, so I'm just going to remove what I drew back then, just to see where the top is. Let's have a look. I got to, what's that, 168.16?
It could still go to 69 if we have one more rally in NASDAQ.
Yeah, I mean, from a pattern point of view, it doesn't need to. I mean, that's pretty much done. It's business.
Yeah.
So you've got huge downside potential here. I mean, so this is, again, a sort of an archetypal double zigzag, which you're seeing in the Dow, the S&P, NASDAQ from last year's highs. So you got ABC down here, and then you got this rather fluid expand. Well, the Dow was an expanding flat. The NASDAQ was a running flat. This one's technically a running flat. You can see I've sort of marked it up here as a running flat because basically you've got this rally, counter trend rally. You got this very distinct 3 price swings that breaks slightly down into lower lows, and then it whipsaws back up, which is typical of the running or the expanding flat pattern. But this one, because the A wave was so deep as a retracement of the preceding zigzag, and you've broken the previous low, sometimes it's very difficult to complete an expanding flat, which would require a slight break above here, just a couple of pips, but not above 182.94, and then drop. It's going to be too much for it. So we thought, a running flat seems appropriate, and we took 100% of wave A to wave C, and that's how we got that target. It looks to me as if it's done, so we've got huge downside potential for Apple now, which is, you know, if anybody listening in or watching, and you know, it's a really good idea to sort of, you know, take your chips off the table now and walk away. Have a beer or something, you know, wait for it to drop.
They won't. In fact, you know, I wouldn't be surprised if on the last couple of days with other issues under pressure that they rotate in. They're still rotating into Apple. Okay, I'm nervous about the market. I'll just buy Apple. It's a good stock. It's a good company.
That's what they're doing.
You know, and you know. Anyway, let's get back to your stuff. And God, that really isn't. Thanks for giving me hope today. And let's talk about the dollar, Peter, because it's you know, either completing or there's one more wash. What's your bias? Okay, there it is.
Well, yeah, this is quite fascinating because during the decline from September's high, you know, we were up at 114.78 at the time. We've had a nice 5-wave decline into February's low, 182. Yeah. And, you know, ordinarily when we update these types of markets, we say, right, well, we'll give it the benefit of the doubt. We tend to default a correction into a zigzag. So, you know, at the very early beginning of a counter trend rally, we draw that. But as time went by, it became obvious this wasn't going to do a zigzag. We had 3 waves up here, for example. So I suppose it could have been a double zigzag and you have an X wave pullback that doesn't break the low.
But you're going to get in their regular ABC.
But yeah, but this is actually describing an expanding flat pattern.
Okay.
And this downswing from this early March high down here, if I go to my worksheets, which is my sort of sketchboard for analysis, and show you what the dollar index is doing, here's the decline from that high. And it's actually unfolding into a double zigzag pattern, which is really cool. It's ABC down here. If you extend wave A by 60.18, you get really nicely into the C wave low. So that's a pretty good measurement in order to validate the zigzag completion. We then had a bit of a quirky running flat pattern in wave X. It's very definable with 3 waves breaking down and the 5-wave rally again. So you see this in Apple just now. Same running flat pattern, but different time frame, different market, but same pattern sequence. And then if you extend the first zigzag by 60.18, you get down to 99.5, specifically this number, 99.53. And if you cut that by the golden section, so you create a golden section, in other words, you measure from there down to that measurement and you cut it by the golden ratio here, you get wave A of the secondary zigzag. So B is tossing around here and it's in a bit of a range trade. There's nothing really to do from a trading point of view because excuse me, there's no risk reward or anything.
Okay.
That's viable. Right. So you just let it go. But this is really, you know, good. I mean, look, if it popped up there, you can trade it short, put a stop above there and take it down. But otherwise, just let it down here to 99.50.
Probably the smartest thing is to wait for it to get to targets and then look for, you know, even let the first wave happen without you and then buy a correction.
That's right. Well, I think that what you've what's going to happen here is that if we get down to 99.5, so let's go back to the bigger picture. This is it down here. You should see gold
peak.
Complete. Well, gold's already peaked. You know, if we inversely, this is the dollar technically from an Elliott perspective bottomed earlier in February, and this extra downswing as wave B of the expanding flat, it's been giving gold a bit of an extra flip to the upside, but they're naturally inverted correlated. But you can see that gold's already topped out earlier this month.
So a new low in the dollar, but a failing rally in gold.
A failing rally in gold. Gold needs to trade up to 2025, 2030 or something like that. Whilst the dollar goes down to 99.50. And then they should, you know, the dollar will start to appreciate going to the upside, and then gold will resume this correction down. I mean, I've been very modest in this correction down. If anybody's interested in gold and looking at this, the 1820 number is just a 50% retracement of the preceding upswing from impulse upswing from September. Ordinarily, Elliott sort of said that, well, there's a tendency for corrections after a 5-wave pattern to retrace back to wave 4 preceding, which is why the 50% number comes in. But I'm interested in this downswing. That's the first wave of wave A. If you extend that by 1618, you'll get to numbers actually lower than these suggest. So these are sort of minimum criteria. But if you've been fortunate enough to take in the gold rally from September up, it's time to come out now and give it a rest. If you're very active and aggressive, you can go short. I'm sort of shorting the market on the next rallies. But generally speaking, this is dovetailing with the dollar expectancy of this pickup. So you can actually verify the low at 99.50 by just taking a quick look at gold. It should have finished a counter trend rally of something there. And I think also by the time the dollar hits 99.50, I think treasury yields and bond yields should be ready for the next decline.
Okay,
Because
so yields rally while the dollar makes new lows.
Yeah, I think we're getting ready for. I mean, if
Because
I show you,
I do see a disparity when I look at like TLT, which is 20-year proxy. It looks so much worse than like the 10-year yield. Oh,
yeah,
okay,
I mean,
so here we are.
this is TLT, and we've
Yeah,
actually,
so what? Yeah, so
actually
I
got to
mean,
get up here to about 113.25. I think
okay, all right.
it's got to get
I
up
thought
there
that
yet.
might happen with risk off, but maybe not.
Well, I think as soon as the dollar goes bid, you're going to get the next phase of stock market declines, aren't you?
Right, and everything. Peter, do you believe, and I know you cover like how many instruments and markets you cover in your research? Give me an approximation.
Oh, I don't know, maybe a couple of hundred.
All right. Do you believe this statement? If you can get the dollar right, you can get all the markets right.
Absolutely.
Okay. All one market.
Yeah. I mean, generally speaking,
and then it's degrees. Like you called the platinum that was going to become the outperformer 3 months ago, and that certainly was right. I mean, there's all kinds of breakouts that occurred in platinum, but
yeah, well, platinum is it's done pretty well. I think it's going to have this pull back downwards. Probably this is an expanding flat pattern, but in the bigger picture, platinum is going to be a big outperformer anyway, because we can see that looking at the ratio relationship also between platinum and gold, platinum silver, that platinum's going to be the big one. And I don't know why that is necessarily. I mean, don't forget historically, in latter years, in before years, we've had platinum always premium to gold. Yeah. So this is a bit of a novel thing for our generation to see platinum as a precious metal.
We've seen a lot of novel things, like the novel coronavirus and novel.
But anyways, I mean, for those that want to be long of gold in the next turn up, once we've seen this correction down occur, you've got to. I thought, well, silver's going to be outperforming, because of the gold-silver ratio. Silver's going to outperform gold, but actually platinum will outperform silver. So if you're really interested in trading these ratios, you've got to really start thinking about sort of platinum. I think here's the platinum gold ratio. Let's have a quick
long
look.
Platinum, short gold on the spread.
I mean, look at this. This is going back to the 1930s.
Yeah.
And you can see how, platinum now is so undervalued relative to gold. This spread will completely contract, which means platinum will outperform. And over a very long-term period, we're talking about this decline coming through to reflect gold's weakness against platinum. So platinum's going to be a huge, huge outperformer. So don't. And if you can't do that, funny enough, I was speaking to some clients about this, and they said, "Oh, we're going to stick to gold. We're sort of." They're just typical gold bugs. They like the flavor of gold and stuff. And even if
there any platinum shares that you trade? Platinum shares?
I think you asked me this last time, and I struggled to answer, didn't I?
Yeah.
Yeah. So why are you asking me again?
I forgot that I asked you.
You're putting me in the hot seat now.
I thought when it was coming out of my mouth, Peter, I go, I think
I'm tracking Impala or something like that, but I'm a bit worried because sometimes my data vendor is not updating stuff real time, and I have to sort of put this in by hand to measure all the stuff. So I'll have to come back to you on that one.
All right.
Next time we meet, I'm going to have something prepared for you. There we are.
Okay. Anything else that you'd like to clue us in on? I think we really ran the gamut.
Well, I have to say that on the thing that's really interesting me is the way that Treasury yields are working at the moment.
Yeah.
Mainly because everybody's basically, if you look at the bond market figures and some of the traders coming out from some of the sentiment numbers coming out from the surveys on bond markets.
Oh, you mean like huge? I think you have one of the largest net short positions in bonds on the Commitment of Traders report.
Yeah, and
so they're short. So if your bond count is right, they get squeezed out.
Yeah, I
first.
mean, that could switch around down here. I mean, we've got the thing that's worrying me is that when we take a look at the bigger picture, go back to the pandemic low, which is just off to my left here. It's about 37 basis points.
Yeah.
You count up this whole swing up, doesn't look like it's finished 5 waves to me.
Yeah.
I think
This
we've
is a
got at
4.
best the 3rd wave last October, and this is a 4th wave.
Yeah.
I don't think people are positioning in. They won't be positioning
No.
for that. I don't think
They're positioned for 308, but I'm hearing people talk 2.5%, 2%,
Yeah.
10-year yields. They're not. The market isn't embracing new highs in yields by.
No, and it sounds reasonable actually if you think about it, because I mean, if the stock market's going to go down 30-40%, which is our forecast for this year from around current levels. I mean, I'll just toddle with the FANGs index just briefly to show you what the FANGs looks like here. This is the same zigzag decline as all the others last year, and then this expanding flat, 3 up, 3 down, 5 waves up to complete the expanding flat, hit the highs in earlier this month, and that's already starting to turn down. So this is about a 40% drop. This is big. This is the FANGs index. That's why you're going to get smashed on Apple and stuff like that.
Yeah, because it's been the only part of FANG that's held up.
Yeah,
that
exactly.
Almost broke out to the upside. Well, all of these are the rest are putting in failing rallies.
They're all sort of failing as well. Yeah.
Yeah.
But what's really interesting, if you've got a 40% drop like that, or let's say 30% on the major indices, you'd expect the yields to collapse lower. So I can understand why people in their minds just think, okay, maybe the yield, 10-year yield can trade down to 2.5% on that basis. Yeah, that's but I just don't think it's going to happen, because this 5-wave pattern from pandemic hasn't finished. And so far, the proportionate relationships in 5 waves down here into the 340 number, that was late December. And the 5-wave pattern that's followed from 408 down to here, which is this one, is certainly proportional to finishing a zigzag at 308, 309. And if that's a zigzag, and this pattern hasn't completed, then this is going to have one more big push. We can see it actually by doing a comparison with Italian bond yields. Now here in Europe, the BTP yields are really important because Italy is a bit of a major hub, and it's come under scrutiny, Italy, in the past because of its funding program, its GDP to debt ratios, this type of thing. And all the banks, the tier 1 banks here in Europe, continental Europe, that is, they're all trading BTP. They've all got a huge BTP Bund spread book. Okay. And if you take a look at the Bund spread book, the BTP Bund spread book, and you also take a look at the way in which the outright yields are trading for the BTP yields, you'll see that that also is missing one leg to the upside. There's going to be a big push up to 6%. At some point, and this is also indicative of the Treasury yields coming down to 308, 309, and then having another push up in the 5th wave. Yeah, so we've got a lot of compounded evidence that on the Bund yields as well. Here's the Bund yields trending up. So anybody trading bonds over the next month or two, I think the yields will drop. So we get the Treasury yields down to 308. The Bund yields will drop down to 179. So in fact, that is suggesting that we get some safe haven bond buying. So it's going to pull the yields down when the stock market has its next thrust to the downside. But I think at some stage later, there's going to be some exogenous piece of news. Either its core inflation is still persisting and the central banks suddenly change their thing. Because these yields these 10-year yields are going to be going up into slightly higher highs. Not necessarily the case on the 2 years, But anyway, this is a bit
Okay.
complex for people. Maybe.
Yeah, maybe it's has something to do with the debt ceiling. I actually saw someone saying that it becomes deflationary once they do raise the debt ceiling, because then all the money flows into treasuries, sucks liquidity out of the market and the economy, because the Fed is taking that liquidity now, once the government, by issuing debt.
Okay.
And we could get a downgrade if they can't come together and pass anything. It could be chaotic this time.
Yeah, I mean, we're used to talking about the debt ceiling, every year, aren't we?
Yeah.
And they kick the can down the road all the time.
A lot of complacency about it so far. They'll be
Well, naturally
theatrics,
so,
but it'll get done.
yeah,
right?
I mean, everybody thinks that all the time, and there could be a
Yeah.
glitch. I don't think you're not going to see the government go bankrupt. I don't think this is the right timing of that bigger cycle, where we've got an inflation pop cycle still running. And after these equity declines this year, by the way, for everybody watching and tuning in, after we see the equity declines, we're going to see another big bubble. The S&P and all the major indices are going to make higher highs.
Can I ask you this, Peter? Because, I interview people that are looking for a melt up to new highs. And then I think about your count, and you're basically the same, except there's one more shoe to drop to clean out the people who thought we had a bottom last October, and then the melt up happens. What are they missing that they think wave 4 ended at the October low, and that and the melt up is in progress now?
Well, I mean, you're talking really from an Elliott perspective or a fundamental basis. Yeah, I mean, Elliott.
They're Elliotticians.
Oh, okay.
These guys. So, I mean.
Well, that's news to me. I tell you why. I mean, I don't look at the platforms too much about what other people are doing, but I mean, one of my clients did tell me that there was a group out there who are saying that there's going to be an Armageddon collapse.
Oh yeah, that's Prechter.
Oh, okay, that was Prechter, was it?
Yeah.
Okay, well, he's a perma bear always, isn't he? But,
right. Yeah.
So you're telling me there's others who think that October was a major low and then we're going up again, right?
Yeah.
Well, I mean, we had a look at these expanding flat patterns. Maybe they think that there's 5 waves up here, which there is. I mean, this is a 5-wave diagonal in the S&P, and if you go back to look at the FANGs index, where are we here? You can see 5 waves up from October as well.
Because no one's going to want to buy the S&P. No one's going to want to buy the S&P at 3,000 down there after they take the October lows out.
Exactly. So that's when that comes out. But as far as commenting on what you just said, I can only assume that they're looking at, they're not paying attention to this pattern and what it really is, and saying, well, that 5-wave advance on the FANGs, and there might be 1 or 2 others, is part of a new uptrend. But it doesn't make sense, because if you're going to say that October was a major low and this was part of a new uptrend, how do you count this swing down? Well, we've got strict, pretty neat evidence that that's an incomplete double zigzag. Why? Because if you measure, and I've just put my Fibonacci ratio to measure 100%. If you measure that initial downswing, okay, and pull it up to the correction that follows, bang. I mean, there's 100% equality in those 2 swings down. That's about as much evidence as you need to show that that's a zigzag. Well, if you've got a secondary zigzag after the rally, this would become wave X. But where's the secondary zigzag? Doesn't exist. So I mean, okay, you can look through. I can show you 20 different examples like that, which are all much the same. So it doesn't make a lot of sense why you would be bullish from October's low. No, there's going to have to be a break below October's low, wash out everybody. And I mean, it's very interesting now that you mentioned this from others doing Elliott wave, because I wasn't aware of that. And of course, then you've mentioned Bob Prechter's name, so you said that he's a perma bear, and so it looks like we're in the middle of it. We're neither perma bears or perma bulls, but we recognize a 30-40% drop and then new highs. So I think that will, that'll be interesting to see how people adjust later.
Okay. Jane would like to know your count on Bitcoin. We could wrap it with that, Peter, and you could tell people how the best way to follow your excellent work.
Okay, thanks. Well, let's have a look at Flipcoin. Yeah. Actually, this is our last chart that we published in our
Wow, is it
report.
getting wild? The action yesterday was
Yeah,
wild.
yeah. It picked up. I don't think it's going anywhere fast to the upside because if you go back to sort of November, we've had 5 waves up, and we've had completion at 31,000. And we've already had an intra-hourly 5-wave drop here. So I think this is just a second wave rally, really. The interesting thing is that when you look at the entire movement of Bitcoin, this is actually an expanding flat pattern, which is just off to the left a bit here. But you have wave A down, B up, which is a very archetype 3-wave rally to 69,000 last November. And then you have 5 waves down here. Now, this is a rather peculiar thing because each of the downswing legs here, so each of the impulse waves, that's wave 1, this is wave 3, and this is wave 5, technically. I mean, that ordinarily is very unusual because 3-wave composition in each of the impulse waves is normally associated with an ending diagonal, which would be okay if you had overlap in wave 4 and 1, but there isn't. So this is a bit of a hybrid. So there's a possibility that intermediate wave 4 is finished here. And this 5-wave advance is the beginning of a new trend. But that means, of course, that we're going to have a fairly severe correction. If we get other risk assets being sold off, like stock markets,
right,
then Bitcoin, you should allow for a deep correction, at least back to here, maybe a tiny bit more. But I'm saying that because this is such an unusual 5-wave impulse. I think I've got it on this other chart here. Oh no, I don't know where I've got that actually. Well, okay, it's here on the weekly chart. And so this is finishing wave 1 at the moment, and wave 2 is coming down. But actually, I can't be certain if that 5-wave advance is proportionately, it can measure as an expanding flat for wave 4.
For 4 with one more low.
And it could go down to 14,000. Well, what does it tell us to do? Well, it tells us not to be, trading too overly aggressive long at the moment, because we're going to get this correction down either way. And we'll see how the pattern diverges, because basis a second wave correction, this would be a zigzag, a 3 price swing event. This one would demand a 5-wave pattern down to a slightly lower low. So I'm not sure which of those two. I'm working off the assumption that this is just going to be a deep correction to us to buy into a secondary low. But I just put this out because I want to make sure that everybody's aware of the risks involved at the moment.
Okay.
But the bigger picture looks pretty bullish.
Yeah, there. Look at his count, 154.
154 eventually.
In a few years.
So I think this looks really good. And yeah, I think that I'm going to give myself a plug now, saying thanks. So this is
look, you subscribe. I see you subscribe to your own letter.
I do. Nothing like eating your own food, that you cook. And so this is wavetrack.com. This is our main page. And if you want to subscribe to a bi-weekly report we put out, it's called Elliott Wave Compass. And just go to the registration subscription level here. And here's the Elliott Wave Compass report. The cost is $39 a month. We publish twice a week. And it shows you a lot of what we've been discussing today. So a lot of the major indices in the US and Europe, and a bit of Asia. And we do about 5 or 6 currencies. We do the fixed income, treasury yields, and bond yields. And we also do gold, silver, and oil. So yeah, take a look, and it would be great to have you aboard.
I've always been a fan of Peter's, and always interested in his work and his creative thinking with Elliott. So check Peter out there, and he's not real active on Twitter, but go to his website, and definitely something in my intelligence gathering.
That would be great.
Yeah, so Peter, really, we ran over. Thank you for giving and giving and giving. Some guy on Twitter, Peter, asked a guy I just interviewed, what's your take on Brent crude? And it wasn't to me. No, I don't know. And I said, what do you do for a living? And do you give it all away? There's something about being in our business that, it's hard work. I know how much time you put into it, and the team puts into it here. And I put a little time into trying to educate and give people good ideas. Yeah, 39 bucks. That's what people risk in 30 seconds of FX trading. So anyway, keep it in
No,
perspective.
thanks, Dale, for explaining that. That's really good of
Keep
you.
an
I
open
appreciate
mind. Keep an open mind. It'll keep your account open.
it.
Don't be stubborn. And my trading warrior brother, Peter, thank you so much.
Thanks,
Great.
everybody. Thanks to you, Dale, for inviting me
All
again.
right.
And the
Thanks for hanging out and faced with us, Peter. Love you, bro.
Yeah, love you too. And we'll catch up soon, hopefully.
All right. Take it easy.
God bless everybody.
All right. That's a wrap, everyone. You could join the team in 6 minutes on the morning edge, and see everyone tomorrow. What's tomorrow? Oh, TGIF. Okay. Don't just count your pips, count your blessings.